Have you ever considered the potential of investing in emerging markets? Emerging markets, a term you might have come across in financial news or investment discussions, represent countries transitioning from developing to more advanced phases of market maturity. This transition is often characterized by rapid urbanization, a burgeoning middle-class population, and significant technological advancements. These markets are becoming increasingly relevant on the global economic stage. We're talking about countries like India, Brazil, China, and South Africa, among others. These nations are not just catching up with the developed world, they're poised to become major economic powerhouses in their own right. One of the hallmarks of emerging markets is their impressive GDP growth rates. While developed markets like the United States and Europe have more mature, slower-growing economies, emerging markets often exhibit much higher growth rates. This rapid economic expansion can potentially translate into high returns for investors. Consider this. When you invest in an emerging market, you're tapping into the economic potential of a country on the rise. You're investing in their growing industries, their expanding infrastructure, and their increasing consumer demand. You're supporting and benefiting from the upward trajectory of their economic journey. In terms of specific sectors, there's a wide range of opportunities. From technology and telecommunications to consumer goods and energy, these markets are teeming with potential. The key is to identify those sectors and companies that are best positioned to capitalize on the unique dynamics of their respective markets. Of course, investing in emerging markets is not without its challenges. There are risks associated with political instability, regulatory changes, and currency fluctuations, to name just a few. But with risk comes reward. And for those investors who are willing to navigate these challenges, the potential returns can be substantial. So, emerging markets present a unique and lucrative opportunity for savvy investors willing to navigate the risks. The potential these markets hold is immense, and the opportunity to participate in their growth journey can be incredibly exciting. And who knows, your investment could be the catalyst that elevates an emerging market to the next level. Take a look at India, for instance, a country experiencing a tech boom. India is riding the wave of digital transformation. The country's growing middle class, with its increasing purchasing power and thirst for innovation, is fueling a surge in the tech industry. This is complemented by a rising internet penetration rate, with millions of new users coming online every month. These factors have created a fertile ground for technology and innovation to flourish. The landscape of India's tech sector is as diverse as the country itself. From e-commerce platforms and digital payment solutions to edtech and health tech startups, the spectrum is broad and the opportunities are many. Tech startups in India are not just surviving, they're thriving. They are making waves on a global scale, drawing attention from international investors and tech giants alike. Consider the success stories of Indian unicorns like Paytm, Zomato, and Bijou's. These companies started as small ventures but have grown into billion-dollar enterprises, delivering impressive returns for their investors. Paytm, a digital payments platform, has transformed the way transactions are made in a country that was predominantly cash-based. Zomato, a food delivery app, has revolutionized the dining habits of millions. Bijou's, an online learning platform, has redefined education for countless students. But the story doesn't end here. There's a whole new generation of tech startups waiting in the wings, ready to disrupt the market with fresh ideas and innovative solutions. This is where the opportunities lie for investors. With the right strategy and a keen eye for potential, investors can tap into this burgeoning market and reap significant benefits. However, it's important to approach this sector with a nuanced understanding. While the rewards can be high, so can the risks. Therefore, comprehensive research and due diligence are key to identifying the most promising ventures and navigating the complexities of the Indian tech industry. The tech sector in India represents a vibrant and rapidly growing market with enormous potential. This tech boom is not just reshaping India's economy, but also presenting a world of opportunities for investors ready to embrace the future of technology. Now let's shift our attention to Brazil, a country making significant strides in renewable energy. Brazil, the largest country in South America, is rapidly becoming a global player in the renewable energy sector. This growth is driven by a confluence of government initiatives, increasing global demand for clean energy, and the country's abundant natural resources. Brazil's government has been instrumental in propelling this sector forward. They've implemented policies that promote renewable energy, including tax incentives and financing for renewable projects. These initiatives have stimulated a surge in renewable energy infrastructure development, transforming Brazil into a hotbed for clean energy investments. The country's rich natural resources also provide a solid foundation for renewable energy production. Brazil is blessed with abundant sunlight, wind, and water resources, making it an ideal location for solar, wind, and hydroelectric power generation. It's no surprise that Brazil is home to some of the most successful renewable energy projects in the world. One such project that stands out is the Itaipu Dam, one of the largest hydroelectric power plants in the world. This impressive infrastructure project not only showcases Brazil's capacity to harness its natural resources, but also underlines the nation's commitment to renewable energy. Another noteworthy venture is the Serrote wind farm, a testament to Brazil's wind energy potential. With a total capacity of over 470 megawatts, the Serrote wind farm is a shining beacon of what the future of renewable energy in Brazil could look like. But it's not just about what Brazil has achieved so far, it's also about the potential for future growth. With increasing global demand for clean energy and Brazil's commitment to reducing carbon emissions, the renewable energy sector in this country is poised for accelerated growth. Investing in Brazil's renewable energy sector could yield high returns. However, as with any investment, it's crucial to conduct due diligence and understand the market dynamics. The renewable energy sector in Brazil offers a sustainable and profitable investment opportunity. There's a world of potential waiting to be tapped in Brazil's renewable energy sector, offering a promising avenue for those looking to invest in emerging markets. While the potential rewards are high, investing in emerging markets is not without its risks. As we venture into the world of investment, it's important to be aware of the potential political and economic risks that are associated with emerging markets. Political instability is one such risk. Governments in emerging markets can be prone to abrupt changes, and this instability can create an unpredictable business environment. This not only impacts the operations of companies in these markets, but also affects their profitability and, by extension, the return on your investments. It's like trying to build a house on shifting sands. The foundation can be unstable, and the entire structure could collapse without warning. Regulatory changes also pose a significant risk. It's not uncommon for laws and regulations in these markets to change suddenly and without prior notice. For investors, this could mean changes in tax laws, import and export rules, or even property rights, all of which can impact the value of your investments. Imagine waking up one day to find that the rules of the game have completely changed. That's the kind of uncertainty you could be dealing with. Economic risks are another concern. Currency fluctuations can significantly impact the value of your investments. If the currency of the country you've invested in depreciates against your home currency, the value of your investment decreases correspondingly. It's like playing a game of tug-of-war with invisible forces that are constantly pulling in different directions. Inflation is another economic risk to consider. High inflation rates can erode the value of your investment and reduce the purchasing power of your returns. It's akin to a slow leak in a balloon. Over time, the balloon deflates and loses its shape, just as your investment loses its value. Despite these risks, the allure of high returns often makes emerging markets attractive to investors. However, it's crucial for investors to thoroughly assess and understand these risks before diving into emerging markets. After all, as the saying goes, forewarned is forearmed. Despite these risks, the future of investing in emerging markets looks promising. As we navigate through the third decade of the 21st century, the economic landscape is undergoing a seismic shift. Emerging markets, once seen as high-risk ventures, are becoming increasingly integrated into the global economy. This integration has been fueled by advancements in technology, improved infrastructure, and robust policy reforms, which have made these markets more accessible and attractive to investors. The growth trajectory of these markets is not a straight line, and there will be setbacks. However, the ongoing trends suggest a bright future. Rapid urbanization, a burgeoning middle class, and increasing consumer spending power are all indicators of the potential these markets hold. Emerging markets offer a unique opportunity for investors to achieve high returns. These markets are often characterized by high growth rates, which can translate into significant profit potential. However, this potential for high returns comes with a higher level of risk due to factors such as political instability, regulatory changes, and currency fluctuations. But it's not just about the potential for high returns. Investing in emerging markets also provides an opportunity to diversify investment portfolios. By adding investments in these markets, investors can spread their risk across different economies and sectors, which can help to reduce overall portfolio volatility. As we look to the future, it's clear that the role of emerging markets in the global economy will continue to grow. The World Bank estimates that by 2040, 6 of the 7 largest economies in the world could be today's emerging markets. This shift represents a significant opportunity for investors who are willing to navigate the complex landscape of these markets. So for those willing to navigate the complex landscape of emerging markets, the potential rewards could be significant. The journey may not always be smooth, but with careful planning and strategic decision-making, the road to investing in emerging markets can lead to a world of lucrative opportunities.